Hey, what's going on, YouTube? It's Flex and Joe, and I'm here at the request of my good friend, Mr. Shiny Object Syndrome, to go over the snow chart. So let's get into it. So if you look at the snow chart here with no, I'll move myself over here out of the way with with no EMAs, no studies on, right? We just see this is a very gappy price action chart, right? We have this huge gap down. This is over a 20% gap down on these earnings in February of 2024. And since then, we have, struggled to kind of move back up to this level after a year and a half, right? You can also see that, like looking at some of the other earnings, there was a little gap up here. It flushed. There was a run up into earnings, and then of course a gap down that took a long time to fill. It actually wasn't filled till here, and I'll show you that. You have this gap up off of earnings. You have this little gap up off earnings that was filled like it's almost immediately. And then we had this gap up off of earnings, which has not been filled yet. But now it does look like we were coming back down and potentially going to test that, right? So let's look at some of the things that I've drawn out, and we will work our way from left to right on this chart. And I'd like to call your attention to a few different things. So the first things first is I mentioned in the gap fill video, right, that I color code the gaps based off of the day of the week that they're formed, right? And if we look at some of the major gaps that are formed here, we will see that they are formed on the same day. Like look at the, yellow, 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 yellow. There's 5 different yellow gaps here. I did miss one, so let's go ahead and chart this one out. This would be the November 2024 gap. So we're going to go back. Is it going to let me go that far? I don't think it's going to. I think I'm just going to have to do it off of the daily, unfortunately. So that's fine. We'll make do. I like to draw it off the 30-minute. Again, if you haven't watched the gap fill video, you just need to check that one out. So look, we had this gap here, here, right? And then how I will do this is we'll look and see, okay, this is again going to be another yellow gap, right? So this is 11/20 to 11/21/24 earning report gap up. Okay, so you have this gap up as well, right? And this took a long time to fill, but again, we're going to work from left to right. So now that we know that there are a lot of earnings gaps here that play a big role, and we also see that there's a lot of gaps on a certain day of the week, we can see how snow likes to move on its own. Each ticker has its own unique personality, so the sort of nuances and the science, if you will, won't be exact. Of course, it never is with trading. We're really got to paint with a bigger crayon versus trying to thread the needle. And so this does no need to be all orange, right? We can make that all yellow. We have this gap down 230 to 181, a 21% drop, right? And so if we just focus on these lines that are now highlighted blue because I've clicked on it. See, we encroach on this gap and we flush back down, right? We push up again. We hit the 23% Fibonacci, right? And then we end up pushing back down, right? If we also, one of the things that I've been studying and looking at later is measured moves of the gap, right? So we see here, if we take this gap and then have a measured move, that's one of the levels. And if we have a negative 1.5, not a 13.5, what are we going to get? Oh, so 1.5 measured moves of the gap actually yielded us the bottom twice. Very interesting. Okay, so and when this gap ultimately becomes filled, I will still look at what is a measured move 1 to the upside and 1.5 to the upside, being that sometimes we'll see the market will make equal responses. But that's another story for another time. For this video, again, looking at the levels that I've highlighted blue. Okay. Here, you see this, that bounces off of this, right? And we push our way back up. Now, as we've pushed our way back up into this gap, right, we actually gapped up off the last earnings from 179 to 192. We moved up here. This area was really important, right? Because we pushed into the golden zone, came back, held the lower Fibonacci level at 38.2, then proceeded to consolidate and chop inside of the golden zone for a couple weeks, right? This allowed the EMAs to catch up on the daily, right? And I'm going to go ahead and put those back on now. Oop, look how nice that looks with those EMAs catching up. Okay. This allows them to catch up and consolidate, and then we get another push off of the 512 cloud here, and we get another little gap up. The problem is when we get this little gap up, going to zoom in now to make it easier for everyone to see. When we get this next gap up, you'll see, hey, look, right? We push up, we almost immediately come down to the golden zone, and we are not getting anything, any pushes higher, right? If we look at what is the measured move, oh, look what happened on day 2. Look where we're struggling repeatedly. And let's set it for all curves. Look where we are struggling repeatedly. The measured move of the gap. 1, 2, 3 times we fail to push higher, close higher with any sense of strength. We come back down, and what do? We fill the gap. We proceed to chop in through here. And I left it on for a few extra days just to show you guys. It just chops, and then it ends up pushing back up, right? And it's pushing into the remainder. What is the remainder of the unfilled gap from where we started all the way to the left? Its inability to fill this gap leaves me to believe now. I'm going to zoom back in. Leads me to believe that these levels from that particular gap are going to get hit and hit and hit and hit. Now, when you see this rejection followed by a gap down, you get under the EMAs. It goes under the EMAs. It bases under the 920 cross, right? Great short entry. It flushes. You would, in my opinion, I would definitely be scaling as we broke this low pivot. It comes back up. Okay, that's fine. Still no reason to cut this as a short. Huge move down. Scale trigger breaking that low right at the 38. Scale trigger right here as well as we hit the next one, and as we encroach on the top of the gap here at 192. If this name and this sector, the software sector, which Shiny happened to point out that this whole sector has been weak, if this sector and this name continues to be weak, I would expect that we would continue to move lower. And where might we go? The next particular targets that I would have in mind would be the golden zone of this gap, right? And then the fill of this gap, which happens to coincide very well with the daily 200 EMA, right? Which is, a favorite place for institutions or whoever to catch a bounce. There is one other thing to consider here, is that we had this gap right here, right? So might be a little bit difficult to see. I'm just going to go ahead and delete this one for a moment so you can see very clearly. 177 to 167, we had a $10 gap down here. And this, again, was following 920 EMA across. The 20 EMA got tested on the daily, and we just flushed, right? We couldn't push over it, and that's it. Overnight action happened, and it rejected, and it moved lower. So we moved lower from there, right? And as we moved up, right, we pushed, we traded all the way through this area, but we left this little bit unfilled as price jumped up, okay? This is the gap down. This is the bit that's unfilled. Coming below the daily 200 would probably be enough to shake out anybody who wants to buy the 200 EMA long, but also enough to fill this gap. So I would say that if we're going to continue lower, here would be the places that I would look for it to hit. Right in here. These are a little bit bigger than maybe they need to be, but just so you can see very clearly, boom, boom, boom. Okay, so those are the particular areas that I would look for. We do also have this pivot here at 188, which isn't to be ignored. And let's see if we would want to turn on the, looks like probably the 0.382. And yeah, that's pretty well in line with this pivot right here. So areas to be cautious, areas to scale of as we scale some off, right? As you're here. That's totally fine. The thing to also be concerned with, of course, is that the overall market has trended very bullish, and so when the entire market is lifting, while this does appear to be a weak name, it may not have that much more left. We could see reasonably that the price action proceeds to occur, something like this, where it even pushes up back into this area, right? Even a little bit further, overlapping this wick right here. But that's a gray zone, overlapping into this wick before maybe consolidating a little bit and then making its move lower, right? So, and it could also just go sideways, but is now very extended from the EMAs to the downside, sitting here on what was once very, very important support. right? And I say that because if we look at the volume here, this is the highest volume right here on this earnings candle that we've had in about 8 months, 9 months, right? So just a little bit higher than this earnings as well. So you'll see there's just some other unfilled gaps that I marked because they were sizable and they kind of got left up through the way. I highlighted this purple one, right? As was studying gaps, I highlighted this purple one because what happened here, right? This is an EMA reclaim, and then you have the EMAs crossing behind it. It pushes up, right? So, there are some people who maybe, depending on their strategy, might take this here, right? And risking, this candle's low, etc., right? Which would be about a $6 risk, but ultimately, you're looking to get at least 3 to 1. And this doesn't give you a reason to stop out following this cross for quite a long time. So this was a fantastic EMA cross trade on the daily. And the fact that it pushed up over and left, the entirety of this gap unfilled. It was literally a gap and go. I don't believe there's a lower wick on this candle. The open is 146.31. The low is 146.31. It is a completely shaved, clean candle on the bottom, which is a big sign of strength. So when you get a gap move and it just pops like that, especially when you're at the dailies, that's what I was calling out. Again, going back to older gaps here as well, when we had this earnings gap down, it was important to note how this one behaved. Again, you probably would see this is pretty close to that 0.382, not 1.382, 0.382. Okay. Wow. Right on it. Kisses right off of it, comes back down. And let's do the -1 as well. -1. Oh, right there, right at the lows. Same thing. Here, pushes back up, comes back. This is probably like -0.618. -0.618. Yep. So a lot of these levels just continue to happen like again and again and again. And the major catalyst and areas where there are high volume and significant movement offer the best levels. This pushes back up, right? Goes almost all the way to filling the gap. Can't do it. Gaps up and tries to do it again. Flushes. Bet you that's the 78.61. Yep. Right there, right? So it's overlapping the major earnings gap down here, the measured move of that one, but realistically it's a big one off of that 78 again. So it pulled back down, pushes up, rejects off of it. What does it do? It comes back down almost completely to the other side, catching the EMAs before trying to lift off again, and then you get that huge earnings gap up. Okay, so hopefully this helps explain some things. I know I've probably built upon the concepts in the first video, and I'll continue to do this as we go through individual names and just do one name per video. But appreciate you for checking this out and watching it. Let me know if you have any questions in the comment section down below, and I'll see you in the next one.